Ladies and gentlemen, hello. Are we live? Are we live? I think we're live. Hello. Loud and clear. Copy that. Roger back. Can we hear? Is audio working? Audio working? I think so. Let's see. Are we live? Are we live? Let's turn that on. Hit you guys with an advertisement. Why not? Hello. Let's see. Load bar, manual, automatic, frequency, medium. Let's see. How are we? How are we doing? Can we hear? Hello. What a week. What about Resolve? Yeah, perfect. Volume good? Cool. Resolve earnings tomorrow morning. Isn't that exciting? You know what other stock has earnings tomorrow too? Poet. So you get 2 for 1. You get Resolve and Poet. You're gonna wake up to some moves. But yeah, we do have Resolve is a tricky bugger. Look at Resolve. Up 12% in after hours on Friday. From what I can tell, I did not see any specific news. Maybe I missed something. But the 12% Friday after hours move. Anytime you see that kind of weird activity right before earnings, it's a pretty good sign. Big money. They know, they just know ahead of time what earnings are going to look like, what numbers are going to look like. So anytime you have anything like that, boy, is it interesting. Yeah, hit the like on the live if you guys are here and awake. So yeah, Resolve earnings tomorrow morning. Really the question is, do they raise their guidance of 500 million in ARR exiting rate for this year? So what that means is that's next year's revenue. That is contracted revenue for next year. So Resolve is expecting about 350 million in revenue for this year, based on Resolve around $1 billion market cap. That's about 3 times price to sales, a little bit more than that. Next year, 500 million is about 2 times price to sales. Well, if they were to theoretically raise that to, let's say, $1 billion of contracted revenue for next year, then it's 1 times price to sales. That definitely helps the situation for Resolve. I think there's underlying issues there, which could be positive surprises. If the company says, look, we're going to start reporting on a quarterly basis, I would jump massively in how bullish I am in the near term, because valuations are there, all these things are there. If we got a little bit more clarity on dilution, are we going to have any more dilution or are we not? A definitive yes or no, that would re-rate the stock. If we started reporting on a quarterly basis, there is nothing in the way of Resolve from, potentially going up 4 to 5x in the near term. You could logically say a company growing at the speed that Resolve has grown at should be a $4 or $5 billion market cap company. If they raise guidance, let's say 750 million by the end of next year, you could justify a 7 times price to sales with a almost 1,000% growth rate they're expecting to do year over year this year. But again, in this market environment, I expect it to get better. But still, in this market environment with dilution just overhanging the stock above $3.50, it's just a difficult environment for the stock to do well. But I think it will do very well long term. So earnings will be interesting. Are you streaming for earnings tomorrow? Maybe. It's a possibility. We'll see what time earnings come out on the dot. I think it's 8:30 in the morning. They put a press release out for this. But when's the earnings call? Didn't they? Yeah, didn't they put a press release out for this? Yeah, conference call at 8:30. So maybe that could make sense. But if everything's the same, then it's not going to resolve much. But that 12% move in Friday and after hours, pretty good sign that something is going to change in a positive way. So we'll see. Maybe. Resolve is worse than buying SPACs in 2022. I definitely don't agree with that right now. There's definitely SPACs have their own set of issues, but in this market environment, I just think that when you have A-plus companies trading at significantly lower valuations than they are worth, why take the extra risk? Like Resolve, it's just a risky company right now from a shareholder perspective. I mean, they have less than $100 million in cash. They think they're going to be profitable in July. If they want to do a single acquisition from here, which they made pretty clear that they will acquire companies, there will be dilution. I don't think in the $2 range, but that's why I've said you're kind of in this range from $2 on the low side. I don't think the company wants the stock below $2 per share, so you're going to get a lot of pumping, a lot of good news and press releases, whatever they have to do to keep the stock above $2 per share. But above $3.50, specifically above $4 per share, they just have a history of diluting, wham, 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 every time the stock gets above those levels. So in this market environment, when you have, Tesla down 28%, you have SoFi down 50%, you have, Reddit, Roblox, if that's your cup of tea, down 50, 60 plus %, why take the extra risk right now? And I mean, look here, Zeta, right? Zeta, I know I've talked about Zeta a lot, and if you're on this live stream, let me bless you with a stock here. Zeta is literally an A-plus company. Grew revenue 30% last year, projecting 35% revenue growth this year, now profitable. And the company says that they're going to get to $10 billion in yearly revenue at some point down the line with 30% operating margins and 75% of that operating margin converting to free cash flow. If you type those numbers into Grok, type in, what would Zeta stock be if they did $10 billion in revenue with 30% operating margins? Just type that in. You will get an EPS range of between $10 and $12 per share. The path that this company is on, net retention rates above, it's like 128%. That is crazy. That is like top tier of what you will ever see in a software company. They're in a $1 trillion+ opportunity, right? It's marketing. It's not going away. Their customers have a 600% return on investment with whatever money they give Zeta. I mean, they just launched Athena in the past couple of days. The stock got hit on Friday. Not really sure exactly why that is. Probably selling the news of Athena. But that's game changer. They have trillions of proprietary data sets on individuals, what they click on, what they do on their phones. They take in all the data from the customers that join the platform and repurpose that to advertising for, other companies. Long story short, proprietary data, AI, making marketing easy, generating massive returns for the customers with the goal of reaching 1,000% ROI for their customers. 1,000% ROI? That means if you put $10 into Zeta, you're going to get $100 of revenue out of that. A-plus top tier company, founder led. That's always great. But again, back to the point, between $10 and $12 per share, depending on tax rates. Call it $11 per share, maybe 4 years from now, 5 years from now, however long it takes. It's $11 of EPS. Give it a 20 times multiple. Assuming they do not do a share buyback at all, that's $220 per share pretty comfortably. That's not super optimistic. I think Zeta longer term could be well over a $10 billion yearly revenue business. So why take the extra risk? in a company that will dilute investors if they have to. That's great long term. That's prioritizing long term, company success, but it does come at a big cost for shareholders today. And that's been my main problem with Resolve. It's just you gotta do like 50-50. You have to look out for near-term shareholders, short-term shareholders, the people in the stock today. You have to let them also do well and prioritize long-term investors. You can do both. We've seen companies do both. And Resolve just hasn't done that yet. Maybe they'll change. Maybe that attitude will shift. But, maybe not. I just don't think it's a good environment to take on extra risk when you could buy A-plus companies. You're only down 0.44% on tonight's open. Yeah, see, guys, let me tell you, no matter what happens here, you're probably going to get margin calls and capitulation that accelerates. That is probably going to happen at some point, assuming we don't have a deal. It looks like Trump, they want to take Carg Island. You go from a situation right now, let me be clear, where Iran kind of has Trump by the nutsack. I'm just going to say it for what it is. Like, Iran is, from what we can tell, they're like, look, we don't really want to make a deal. If we do, we want XYZ, like $2 million or whatever the number they want to let ships go through the Strait of Hormuz. Like, pretty unreasonable terms they want here, right? But they're like, hey, you want to, invade us? Try to. Okay? That's really bad politically for Trump. Iran knows this. They kind of have Trump by the nutsack a little bit here because of the influence they have on the oil market. All they have to do is offensive. You put Are we are we back? Oh my gosh. Dang it. Are we back? I think we're back now. We're still not here. Dang it. I don't know where the mic cut out, but basically when if there is an invasion of Carg Island, it's probably going to be the Russia-Ukraine playbook 101 all over again. I know it sounds bad, and people that are bears, they're going to not agree with this, and I get it. from a logical perspective. Like, shouldn't Wall Street care about people dying? Maybe, maybe not, depending on who you ask. But the simple answer is they don't. Okay, Wall Street could give a shit less what country's bombing what country. Like, you never even hear about it unless it has a financial impact. Once you get that bad news, you will see the final capitulation, the final move lower in this market, and you'll bottom. Just like February 24th, 2022, when the markets gapped down about 3%. That was the first day that Russia invaded Ukraine. Markets had a terrible open. People started talking about, circuit breakers and all of that. Whenever you hear people talk about circuit breakers, you're typically towards the bottom. Like, that's going to be a really good indicator if that happens, if we invade Kharg Island and take it. But you ended up falling before Russia invaded Ukraine. You were down about 12.2%. And then with the gap open, that low you were down about 14.5%. That morning, gap down about 3.5%. You ended up closing positive 1.5% that day. So as soon as people thought, oh my gosh, it's over for the markets, and panicked in pre-market, that's when the buying started. And then you proceeded to rally about 13% in a month. That would happen again with this Kharg Island situation, right? Presumably. I imagine that if Trump wants to take Kharg Island, there's news that they're going to also take some coastal regions around Iran to open up shipping. Wall Street is going to say, okay, we've taken Kharg Island. Iran has almost zero exporting capabilities for oil at this point. Kharg Island does about 90% of Iran's oil exports. It can handle 10 super tankers at one time. For a very small island, it has deep waters off just the coast of the island. So you literally decapitate the head of the snake when you take Kharg Island, and people will say the conflict likely is coming to an end soon. Maybe Iran's oil, instead of going to the black market causes, goes to the open markets. That's maybe a side effect of potentially Trump taking Kharg Island. But nonetheless, that would be the moment you really want to go long this market. But there's a chance this ends in a deal as well. I was reading some headlines here tonight. Let's go ahead and see what the latest headlines look like. Okay, Trump talking about taking Cuba. It says here, several hundred U.S. Special Operations Forces, including Army Rangers and Navy SEALs, have arrived in the Middle East as Trump weighs next moves in Iran, per the New York Times. Commandos have not been assigned specific missions yet, could be deployed to safeguard the Strait of Hormuz, seize Kharg Island, or target enriched uranium at Isfahan. So looks like at the same time as Kharg Island, you'd potentially be looking at Trump and the U.S. taking that enriched uranium out of Isfahan. Maybe it's there, maybe it's not. It says over 50,000 American troops are now in the Middle East, roughly 10,000 more than usual, joins 2,500 Marines, 2,500 sailors, and 2,000 soldiers from the 82nd Airborne ordered there last week. Donald Trump says that the U.S. is performing extremely well in negotiations with Iran. This is kind of Trump's strategy, right? You want to escalate right up until the point you get a deal. So even like with the tariff debacle, I don't know how new everyone is to investing, but for anyone that started investing after the tariff crash in 2025, April 2nd, my birthday's April 1st, so it's pretty easy to remember that day. It was the day after my birthday. Happy birthday to me, right? Thank you, Trump, for that one. He opened up a crazy buying opportunity, and anyone that did not buy during that time was disappointed. But you escalate right up until you de-escalate. S&P was up 10.5% on April 9th after a couple days of margin calls and capitulation. So don't be surprised if we're hearing all of this about troops and taking Kharg Island and XYZ, and then you do actually get a deal. That's the best case scenario. You get a deal abruptly that ends all of this. But the alternative, Trump taking Carg Island, is going to have a positive impact on markets as well. Our boys at Carg will be sitting ducks. Yeah, that's the moral problem that I guess I have with it. It just sucks to be in that situation. You're definitely a sitting duck on Carg Island. Politically for Trump, that's a dangerous gamble to make, because look, like at this point, I think Republicans have a very low chance of winning the midterms. People saying gas over $4 a gallon just psychologically changes something inside of people. Like even $3.99 versus $4.01, right? Just even a couple, that $4 level is psychologically damaging politically. Because I didn't even notice gas was here in Michigan like $3.70, $3.80. Nobody was talking about the price of gas. Like I didn't hear anything about it. And then next day it jumped to like $4.09, and then the next day later it jumped to $4.20. Everyone's talking about the price of gas. So there's been a lot of damage politically. Now, for the markets, that's a good thing. That's a great thing for the markets. That's exactly what you want. Leaving politics out of it, of course, you're going to make more money if Republicans lose the midterms. Because, yeah, Trump's going to be able to tweet, and he can move markets with tweets. But in terms of actually getting any deals done, getting any legislation passed, it's going to be very difficult to do so. I guess it is already. Look at the airports. But, yeah. Lame duck presidents are very positive for the markets historically. When there's just not a lot gets done. Gridlock in Congress is great for markets. So, dude, $3 versus $4 gas, nobody really cares except for super poors. Yeah, if you're watching this stream right now, you're probably not super poor, right? You're investing, you have money, like, maybe you put $200 a month or $500 a month into markets, but the vast majority of America has been struggling for years. We have been in a consumer recession since 2022, 2023. Like it's been hard for people for a very long time. And, psychologically, even though, people on average drive 10 to 12,000 miles a year. If you Let's do some simple math here, right? People drive, let's call it 11,000 miles per year, divided by a full tank of gas probably gets you about 400 miles. You're filling up 27 and a half times per year. Divide that by 52 weeks a year. You're getting about a half a tank of gas per week. Doesn't sound like a lot. Let's say average gas tanks like 16 gallons a tank times $4, $64, half that, $32. You're spending $32 a week versus if gas is, let's say, like $3.50, okay, times, I don't know where I was going with that. Whatever. You get the idea. Okay. It doesn't mathematically make a big difference, but people feel it. People psychologically feel it. They make decisions differently because of it, even though it's only going to be like a $20 difference in all reality per week. Yeah, and a lot of people are poor. 3 scientific calculators. Yeah, that's just Too long of a day to do that. I shouldn't even attempt. Shares at Datavault. You got now. I'm at 4,000. I think I don't even. It's. I think I got a lot. I was seeing some good Datavault news actually on X over this weekend, or some good commentary around the stock. Let me see if I can pull that up. But yeah, again, just to quickly cover this. Trump says they're negotiating both directly and indirectly with Iran. Trump says Iran provided 20 large oil vessels through the Strait of Hormuz starting tomorrow morning. So that looks really good. Oil's still up like 2% last I checked. That's not verified or oil's up like 3%. That's not verified by Iran. So the fog of war in this conflict is crazy. We've never seen anything like this where, I mean, you could get one headline from Trump and then 5 minutes later, Iran denies it. And then Iran says something and then Trump denies it. And even for a while there, like a full day, Trump was saying, oh, no, we're negotiating with Iran. We're talking to them right now. And Iran's like, no, you're not. So, it's just one of those weird situations where you kind of need both sides to confirm something. Even if Trump said, look, we have a deal done, I think the markets would price in 75% chance that a deal's done, but you would still need Iran to say, okay, a deal's done, to finally, get over the hurdle, price things in. The biggest thing that has kind of irked me or got under my skin around this whole conflict is, this is a total separate side note, a little bit of a rant, I would say. But, Wall Street, they've been so convinced that this thing is going to last for many months, right? Just there's nothing you can tell Wall Street right now. They're all bearish. They all think this is going to last forever. And maybe it does, but I think people really underestimate Trump wanting to keep power for the next 2 years. If Trump becomes a lame duck president, that's just not in the cards for Trump. Trump wants damage mitigation at this point. I think if you could go back, Trump probably would have cut a deal with Iran. A couple weeks ago, if Trump seen the outcome here, he would probably say, "Yep, let's negotiate harder." Even what JD Vance was saying that Israel overpromised, how effective the operation would be to actually get regime change. So, I think Trump wants to get this over with as soon as possible from a political perspective. It's just, you don't want to be a lame duck president. That kind of really hurts the ego too, because I think Trump has done a lot of good things. No tax on tips, no tax on overtime. People are getting record tax returns back. For the consumer, the average person that's been in a bad place for a long time, this is higher gas prices are just not great for, politics. So a lot of people think I'm a Trump hater. I'm not. I'm just surrealist. Try to be, at least. Gonna have to pull a hat trick to keep seats at this point. Yeah. I mean, that's the worst thing that could happen. Higher gas prices. It doesn't get worse than that. You can do a lot of crap and still win an election, midterm, still keep favor with the public, but people got to pay $20 extra at the pump. Forget it. That just never, that's never been good politically. And then at the same time, if you're trying to buy a house or anything like that, you have higher inflation expectations, Feds expecting to be more aggressive and less accommodative. And I mean, same time you have the markets going down. I don't even think the population cares about the markets. Like Trump, I think, could still win the midterms if the S&P was down 20%, but gas was $2 a gallon. I think Republicans would smoke the midterms. Nobody cares about stocks. The average person doesn't care about stocks. Do you think gas prices are a problem? Yeah. More psychologically, like just anecdotally from like people I've heard, they question their decisions. You know, for an example, they're like, okay, I could do this, I could go out to eat, I could do that, I could do this running and go here. And people might have the money for those things, but then they're like, oh crap, I'll burn a tank of gas and I'll have to spend another $60, and people are like, I'll just skip that. You know, that's the burden with higher gas prices. I mean, basically every recession in modern time has had an oil price shock related to it. So if you wanted something to be bearish about, it's literally like every recession before one happens, you have a shock in the oil market. But I don't think we're going to have a recession. I think the big beautiful bill specifically, that adds a lot of stimulus via tax returns, via the, being able to write off 100% of equipment and factories and building. I do think those things will materialize, but it's going to take some time. I think the biggest threat to this market, or one of them, is all the IPOs that we're going to get this year. That's where I'm just a little nervous because look, you are exit liquidity. Retail investors are exit liquidity on IPOs. That's just how it works. If you're an institutional fund manager, you're buying these companies before they IPO in the private market. Because what? You're going to make a boatload of money when stocks IPO. You guys do know how IPOs work, right? Like let's be clear about this. You know how IPOs work. Okay, let's say a stock is $20 per share in the private market. They say, okay, we're going to IPO this stock. We're going to give this stock to Goldman Sachs to underwrite at $30 a share. Okay, cool. So Goldman Sachs makes their fat, return on that. And then they say, okay, wait, how much can we sell it to the public? And then they sell it at top dollar. In the days before the IPO, they get a feel of the orders coming in and the demand for it. The more demand there is for it, the higher the price goes. So Wall Street, they get in at, say, $20, $30 a share. They IPO that thing at 40 or 50, and then they sell out, right? Your exit liquidity for private investors. Like OpenAI. I don't know if they're going to IPO this year. Probably not. If so, it's at the end of this year. Anthropic's IPO could be interesting because people are so excited about Claude and all of this, and that's a whole other rant. The SaaS apocalypse. But it's just a lot of market cap coming from it's trillions of dollars worth of market cap coming to this market, and if retail investors don't eat it up, could be a problem. But we'll see. So I'm a little nervous about that, but I haven't seen any IPO work for retail yet. Yeah, there's been some. I've bought IPOs at Reddit. Reddit worked very well. My freaking mouse, dude. I've had this mouse for like 6 years and it's never failed me, but it keeps failing me all of a sudden. We still have audio, right? Cool. Reddit is one of the IPOs that honestly I was shocked about. I've never been like huge on Reddit, let's say, but Oh my gosh, the thing IPO'd like $30, well, hit a low of $37 per share. It's still at 121. This thing hit a high of $300 a share. I mean, like, I haven't been following this story closely, but every earnings, I see the headlines and they're just blowing away numbers. It's like, damn, who would have thought? Who would have thought Reddit was the IPO that would have done that? But I agree with the IPO exit liquidity play this year. Yeah, that's what makes me nervous. Like, recession, you really need a catalyst for a recession. I don't think an oil price shock is a catalyst for a recession. This economy can be looked at like a boat, right? The smaller the economy, the more concentrated the economy is, the smaller the boat is, right? The bigger the boat is. It's easy to turn a small boat. It's easy to run a small boat into a rock, right? Easy to maneuver a small boat or a jet ski. The U.S. economy is like an aircraft carrier. It doesn't turn fast. It doesn't move fast. It stays pretty constant unless there's a big shock, like a missile hit it or something. Knock on wood, no forecasting here. Hopefully that does not happen, right? Oil, it's not a recession catalyst. I don't think private credit's a recession catalyst. I think the 40-50% odds of a recession that are priced into markets today represent a buying opportunity, as long as we're not surprised by something that comes about over the next couple of months. That's always a possibility. But I mean, consumer cyclicals, companies that do well when the economy does well, do poorly when the economy does poorly. It's down 15% in the past 3 months. In the past 6 months, consumer cyclicals are down 13%. I mean, people are very, very bearish. Like, dude, the valuations in technology, a lot of you guys have never seen valuations this cheap, ever, in your whole lifetime. I mean, there's some weird shit going on right now. And it's been happening for a while. I guess there's a lot of causations to it. Just it being a midterm election year causes some weird things to happen regardless. So not super surprising. The median drawdown for the S&P is around 15% during a midterm election year. So we're not even there yet. So there's always something to panic about during a midterm election year. But I mean, S&Ps went from 23.1x forward PE down to 19. EPS estimates are hitting record highs right now. At the same time, technology is trading cheaper than consumer staples. Like, you're talking these tech stocks that are growing, like a Walmart, let's say. I don't know Walmart's numbers off the top of my hand. They're probably growing between 5 and 10% revenue. So somewhere along those lines. But the stock's got like a 40 times, 50 times PE multiple versus, let's say, Microsoft that's growing earnings at 35% a year, 30% a year. Revenue probably growing that around 20% per year, if I remember my numbers correctly. Like, trading at a 20 times multiple. It makes no sense what is happening right now from a valuation perspective. And that's really been disconnected for a long time. Yeah, you can see here, technology has a 20 times multiple. Consumer staples at 22. Industrials at 24. This is the highest valuation you've ever seen for industrials. They've never been this expensive. I get there's the AI trade, the tailwind there, and I understand it. But if industrials are going to be a 24x PE and people can still justify buying those, technology better be like a 30 times PE. in my opinion, who knows? The macro is still crap. Yeah, that's true. But that's where I'm optimistic that things can, do a little bit better. What really will help the economy do better is lower rates, specifically like lower mortgage rates. Because if you bought a house in 2021, let's say for an example, the house that I live in or the house before that, right? Mortgage was like $400, $500, stupid cheap. Rates were zero. Okay. Literally, I bought that house March of 2021. Like, rates were literally as low as, like, I bottom ticked the friggin' rate market for mortgages, okay? Well, today, that mortgage, if you wanted to buy the same house, it would be way more expensive, right? The price of the house, but you'd be paying, like, probably $2,000 or more to get the same mortgage that I have today. People can't afford that. So what happens and where we are at right now is a lot of people are struggling with their bills and their monthly payments and, just struggling with the cost of living. They're not doing well, but they have a lot of equity in their house. So what moves financial conditions a lot is real estate moving. And you have some of the lowest numbers we've seen in a very long time for home sales. And if rates can come back down, even to like 5%, when I bought my first house, my rate was like 5%, 4.75%, something like that. And that's a pretty good, that would be a really good environment compared to where we are today. Imagine if people could sell their homes and all of a sudden they have 50 grand in the bank. People are going to spend it, right? I don't think we're going to the Japan style of financials anytime soon. Japan's, philosophy really from a cultural standpoint is save, 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 save. Don't spend, spend rarely, right? I don't think that's happening, but people just don't have the money. And like 75% of the median household's net worth is in their home. Right? So the vast majority of people's money or net worth is literally in their home that they cannot sell and they cannot buy a new home. It's without AI CapEx investment, we would have been in a recession for 3-4 years now. 3 years now? AI really started, going off in middle of 2023. We would have been in a recession for a while. 2022, we were pretty well in a recession at that point. I don't care if they try to change the definition on us. We had 2 negative quarters of GDP, but people still had some extra money during that time. We would have definitely fallen into a recession. You'll remember in early 2023 and like Q1 of 2023, heading into 2023, everyone thought we were going to have a recession. Literally everyone. That was the talk of the town. Recession 2023, gonna hit at some point. And then boom, AI came around, CapEx started going crazy. And CapEx feeds into everything, right? Concrete, contractors, HVAC, steel. There's sometimes hundreds of companies that work on a single data center build. So let's see. Let's answer some questions. Elf drop is insane. My average is 69. Dude, Elf just, man, doesn't make any. There's some stocks that will go through, turbulent moments where it just doesn't make sense what is happening. And Elf is one of those, for a company that's taken market share 25 quarters in a row, that just posted almost 38% revenue growth, expecting to do, I think it's 20-30% revenue growth this year. Analysts are expecting 20+% revenue growth for multiple years into the future. Cheap makeup for pretty good quality is not going away. Like, that's one stock where I've talked to like girls about Elf and what makeups they use and all this. And anytime I tell them I invested in Elf, They say that's a great one. Like, you're gonna do well. Elf's gonna do well. But there's a big disconnect. I think my average is, man, I've been buying Elf throughout all of this. I think Elf is in probably a $140, $150 stock by the end of this year. All things said and done, as long as numbers don't like go terrible or something like that. Once people realize we're not going into a recession, at least $100 stock by the end of this year. I would be shocked if it was not. I think my average is in the 70s because I bought right after earnings. I was like, this is the best earnings I've seen of this quarter. Like, they completely blew the numbers away. And the conference call sounded good. Everything sounded good. Stock faded that earnings move, and I was like, damn it. So I've been chasing that one. What's going on with SanDisk and Micron? At one point, they seem to be immune from dropping, but not now. It's the Google. I'm not super versed on the thing that Google came out with. It's just very cyclical. So Samsung is building a factory in Taylor, Texas. Well, this is going to be the factory that helps supply Tesla chips and a lot of other semiconductor products. Well, that has been pushed back to really, like, they were supposed to do mass production this year. Now they're talking about mass production next year. So a lot of it has to do with limited capacity coming from Samsung that has, supply and demand, right? There's a lot of demand for memory storage, and there's not going to be as much supply as we thought this year, so prices are going up. I've said this for weeks and really probably months now. If you did not get into Micron or SanDisk back in the day, you do not want to touch these stocks today. Why? The risk reward is terrible. Okay, I know, the numbers are going to look great for a period. But when this thing breaks, it probably never gets back to the price that it is today. Because, again, they can charge whatever they want because demand is crazy because of supply being limited. This is a demand, the second supply catches up, these stocks are not going to work anymore. Because, again, you're pricing in the future. So right now, it's uncertain, right? But as that factory gets closer to opening up and all of that, that becomes a little bit of a problem. The SPX drop lately is soft, bro. Definitely not enough. Yeah, I've been talking about this. We've had virtually all of the pieces of the puzzle here to get a bottom, to stop the sell-off, to have the crash end. But we did not have margin calls or capitulation. Thursday, you definitely started the capitulation margin calls. Friday, most certainly, was a margin call capitulation day. We'll see what happens next. Futures right now down 0.41%. S&P has an RSI of 28.5. Anytime you get down here, you want to buy the markets. Like, no matter what's going on, anytime the RSI and the S&P gets to 30 or lower, just buy something. Dude, I don't even care what you buy. Hopefully it's not industrials that are trading at record high valuations in the past 10 to 30 years. Hopefully, you have you buy maybe tech or whatever, not financial advice, but you want to buy the areas that have really underperformed. Where the heck is it? Okay. But just buy something. So don't be surprised if, markets do stage a little bit of a recovery. Wouldn't surprise me. I mean, 80% of the trading volume is algorithmic anyways. And, mean, when you get this oversold and sentiment is this bad, it's just a matter of time, really. Estee Lauder, another good makeup stock, beating down ticker. Yeah, I bought Estee Lauder at like $70 before, 50, something like that. So I bought back here during the crash of 2025 a bit. I bought it over time here and there, got in, got out. But yeah, it was definitely working well after that April low. Would be an interesting one to look at again. So, yeah, there is that. Poet earnings tomorrow. What do you see happening? You know, it's all about what the company says as far as production this year. Like, that is it. If Poet says, look, we're having success in our piloting programs with the companies that are using our product, but there's an issue getting production or something like that, yeah, the stock's not going to do well. But if the company says, look, we're doing great. Companies are putting in orders. Maybe they give us some numbers. Maybe they give us it is the first earnings of this year. What a lot of companies do is give you full year guidance. Best case scenario, Poet says, look, we're targeting $200 million in revenue this year. Production is about to start producing. Or maybe they say they've already started production. They see, it could really go either way, to be honest. Poet could be up 30, 40, 50% tomorrow, or down 20, 30, just based on that alone. So, I don't really have any great insight to this. I will tell you that institutional ownership, I don't know how well we can see this on the screen. Institutional ownership jumped big time in the last quarter. That's a really good sign that there's good news coming, right? That big money, they know things before we do. They just know shit. They get told shit. Company executives leak information. There's insider trading. That's one reason why you want to look at 13F filings. I don't give a shit who's selling what. But as a collective, if it's moving in the right direction, that's a pretty good sign. Definitely a good sign. This is a massive jump. The last time you had a jump like this, really any time for Poet you've had a big move up like this, it was right before a big rally in the stock. So it's interesting. Also, short interest in Poet is 8%. Nobody wants to short the stock. So anecdotally, when I look at all these other things, it looks good, but it just really comes down to production or not. Yeah, what the hell? Why did I miss this one? I don't know. What are some easy 2 to 3Xers in the next 0 to 24 months, I think? I think most of the ones that I made a video today, 7 stocks to buy in April, and those, Zeta, Rubrik, Elf, I think Sweet Green could go up a lot more than 2 to 4x if they get their act together, if numbers start to come in good. The stock is priced for terrible results. Even if things aren't great, even if they're not blow your socks off, if the company can show the turnaround story is actually happening, the stock's $4.67. You could be a $15 stock by the end of this year if quarters start to come out good, heavily discounted. That's another one, but there's a lot. There's a lot of stocks that could have some pretty exponential upside over the next 24 months, especially. Yeah, any of the stocks we've really talked about so far on this stream could have that kind of upside. Something, like ServiceNow, you know, you get what you pay for, right? Like, for if you want a pretty easy, 2 to 3x in the next 12 months, you have to take on a little bit of risk, like an Elf, like a Zeta, right? Like a Sweet Green. Sweet Green's obviously more risky than Elf and Zeta, but like ServiceNow, if you didn't want to take much risk at all, I think ServiceNow is a pretty easy one. I think Intuit's a pretty easy one. I think Tesla's a pretty easy one. Anytime that you bought the dip in Tesla, you've been rewarded typically within that time frame. So yeah, just throw a dart at technology and just buy the stock and you'll probably do well. It's that environment where technology valuations are, lower than industrials. What the hell? It just doesn't make any sense. Any news on Datavault? There was like commentary on X over this weekend. I think I meant to pull it up, but yeah, it says why some traders are watching Datavault so closely. NASDAQ and NYIAX built patent-backed market technology for complex contract and exchange infrastructure, and Datavault AI has signed a definitive agreement to acquire NYIAX. If that deal closes, Datavault would gain control of a company with NASDAQ-linked exchange technology, jointly owned patent history and infrastructure designed for more institutional-grade digital marketplaces. There's some good news, but this is just a market environment right now. It doesn't matter what a company says. It doesn't matter if Datavault does something great. It doesn't matter Zeta. Like, there's been so much good news for Zeta. Earnings have been great. It just doesn't matter. This is not a market that you want to judge a stock based on how it reacts to news. Like, you want to pay attention to the news. You want to keep it in the back of your mind. But sentiment always outweighs fundamentals in the near term. There is no such thing as a fundamental investor during a market crash. On aggregate, right? You and I, we're going to be looking at great companies to buy them. But the reality is, when markets crash, nobody gives a shit about fundamentals until you have a recovery. And that's why crashes make, so many millionaires. Because literally nobody cares. It's the craziest phenomena to me. Every time we go through a crash, and you'll have a stock or two, or this time around it's been during earnings season, and you're just seeing these crazy good results, and these stocks are crashing, and it's taken me a while to figure this out, but it doesn't matter what a company says during a panic. It just literally doesn't. Company could come out and, hear the C word, and it would go up 20% in a day. Like it just doesn't matter, right? But you want to pick those stocks up when they give you good news, like Rubrik, right? Rubrik, just like Zeta, net retention rates over 120%, 40, what they post, like 47, 48% growth, projecting 30+% growth for like years into the future. $8 billion company, founder-led, really accelerating free cash flow. High multiple today, but this is going to be one of those stocks that 2 years from now, you're going to say, damn it, at a 40 times multiple, Rubrik was cheap. It was dirt cheap. It's going to be like NVIDIA-esque, right? Which those are the best stocks to own, where people stay away from them because they're quote-unquote expensive, high P multiples, but they grow into their valuations and then well exceed that. Like NVIDIA, dude. NVIDIA was a 70, 80 times multiple, even in 2022. NVIDIA's multiple has done nothing but contract for years now. but their EPS number has far outpaced that. So the stock has done very well. Like Nvidia's multiple has never really went up since 2022. It's just fallen consistently. So that's normally how things should go, right? Normally, as a company matures, the multiple comes down. But when you're in the hyper growth phase, like, having a high multiple keeps some people away, but it should really make you question why the multiple's high to begin with. Oil is staying high for a long time. SPY headed lower, unfortunately. I think you want to be careful with that thought process, right? Because oil markets are going to react to the news. If there's a deal to open the Strait of Hormuz to end the fighting, oil is going to plummet. People aren't going to care. There's been disruption with the oil supply, but again, a lot of it is sentiment. A lot of it is not based on near-term supply and demand. And I think the reality is, if the Strait of Hormuz opened, I don't think we're going to have a massive, continuously running deficit in the energy market. I think things would likely go back to normal on pretty short notice. But hey, we'll see. Maybe not. With crashes, most exiting continues through retirement funds. They are mostly the only ones requiring exits. Yeah, and people just get scared. People they start to think the present situation is going to last forever. They start to think that oil is going to go to $200 a barrel, and then that's going to cause a recession, and that's going to cause the Fed to not be able to cut rates, and that's going to cause earnings to get destroyed. And if you there's a hypothetical for any scenario. Like Nvidia could come out and cut their numbers tomorrow morning. Are they going to do that? Is that going to happen? No, right? So people just really, it's human nature. The markets are just a very accurate barometer of human nature. As weird as that is, because 80% of trading activity is done by algorithms on a daily basis, it's just very human, in the essence of it. And that's why if you can detach yourself emotionally from the markets, you could take advantage of emotional mistakes. Believing the whole thing's screwed. Like right now, I've seen, dude, people are so bearish right now. And I get it. If you read what mainstream media is saying, if you read even analysts, right, that this could happen and that could cause that to happen and blah, blah, blah. The reality is that's probably not going to happen, right? Whenever consensus gets so certain about a certain outcome, you usually want to take the other side of it. And I see people are very certain that this conflict is going to last a long time. They're very certain that oil is going to be high forever. It could be. You want to be prepared for that, but it's usually not going to happen. Think about it, right? Everyone can't win. If everyone has the same logic and the same narrative and they think the same thing, how do you all win? You can't, right? That's why the smaller group tends to win. Money's got to come from somewhere. So that's a whole nother spiel, but retired worker shares, 62% of these new awards for the retired workers, meaning about 310,000 new retirees begin withdrawals every month. Yeah. That's an interesting. That's an interesting way to break it down. I've never heard that put out like that before. Huh. That is interesting. That's kind of wild. Do you think CRM is an easier 2Xer than Intuit? I think the SaaS apocalypse is far overblown. Um, CRM has a lower valuation, but they also have slower growth. Like Intuit, if I believe correctly, just posted 18% revenue growth. Might want to double check me on that. I think it's 18% revenue growth. And I think CRM came in with like 7% organic growth. I think they hit about 10%, but it was like an acquisition that boosted them to that. Or maybe that's ServiceNow. Maybe I'm confusing the two. But just not great growth. But I do think, both high-quality companies. I don't think AI is this existential threat to enterprise software. Like, that is the craziest argument I have literally ever heard in my entire life. Just for one simple reason, there is way too much risk for companies to leave ServiceNow or CRM or UiPath or cybersecurity companies and just give their data to large language models. The nature of AI itself and large language models is great for enhancing platforms today, like ServiceNow, CRM, UiPath, but it's not practical for companies to really ever adopt large language models or tools for that reason from Anthropic or OpenAI or any of them because of security risk. I mean, that it just like you have to have security and governance, and maybe AI will change over time, obviously, and maybe that will be different. But it's bedtime. Yes, it is her bedtime. Spring break. NQ, Bitcoin, and GC futures inching higher for now. 10-year holds, 8-month high. Let's see how things unfold this week. Yeah, I think, dude, man, don't be surprised. Don't be surprised if we wake up tomorrow and there's some kind of ceasefire announced. Or worse news. Like, I do think you're going to hear some escalation or de-escalation this week. Timing uncertain for sure, but new employees aren't putting in anywhere near as much as retirees are taking out. Yeah, they're all on DraftKings, bro. I seen a TikTok. I don't really get on TikTok much, but when I do, it's like funny TikToks. And this kid was, I think he was being serious. He was like, look, people are investing in stocks. They're buying bonds and CDs. Me, I'm going to retire off a parlay. He's like, one parlay and I'm sitting in the Bahamas drinking margaritas. And I'm like, damn, dude. That's wild. But yeah, it's crazy because I do not know anyone in my real life, like personal life, that invests in stocks. Well, I mean, I know this college kid that has like $200 in the markets, but that really doesn't even count. Get insider info from Trump. Yeah, I need to hit up Barron. Dude, man. You know how many tips Barron has got? It's crazy. Not a $5 fantasy football draft. Pure luck. No way. I mean, I believe you. $5,200 on a $5. Man, I've been so close to hitting some crazy ones. Well, not quite that crazy. Like $20 and like 2,000 or 3,000. I've been like 2 yards off of some crazy ones. Like literally, like nobody would have made those bets, but yeah, that never happened. I think the most I've won is like 100 off 510. Now options, that can get crazy. I've made 25 grand off $500 in options before in one trade. But options are not great in this environment either. Just so we're clear, like if anyone is hardcore trading options right now, be careful. Be very careful, because one tweet is gonna kill it. Like, good or bad. One tweet you're gonna kill it, or one tweet you're gonna hate your life. And when stocks and high quality stocks like these ones we have deals on today are, as low as they are, just buy the stock. Buy equity. Walk away with something. Please do not trade options in this environment. Unless you're selling puts, then that makes sense. But I'm 15K invested and aiming to double that by next year. There you go. Hell yeah. That's a milestone, man. You should be proud. Most people don't have that to their name. Just sad because, like money, money just buys you freedom and opportunities and experience, and hopefully, you want to do good with it, right? But, like me, I want to give all my money away. Like my kids, I will teach them whatever they want to know. Whatever, if they want to go down the path that I went down, that's fine. I will teach you everything I know for free all day, every day, But like, you're not getting anything, right? Like, you have to make your own choices. But how cool would that be to, just buy vets homes, right? Just, hey, homeless vet, let's buy you a home. Let's pay for the whole restaurant's food, right? Just be outrageously generous. And I mean, I do that now, like drive-thrus. Like, I usually always pay for the person behind me and stuff like that. But to do it on a big scale, man, that makes me excited. I really watch entire video. Hell yeah, dude. You have some great insights into markets. Keep up all the good work. Thank you. Thank you. Thank you. Thank you. I do try. But, emotions are hard to fight, because I remember the first time that I said, pointed out the Russia-Ukraine and the day that conflict happened and how the markets bottomed that day. And I said that if there is an invasion of Karg Island, that's probably a bottom for markets as well. Man, everyone hated that. But I think now more people are starting to say something along those lines. So, consensus is starting to change a little bit towards it. I think. Maybe not. Maybe everyone's still, super concerned about that, super bearish. But, yeah, during market panics, emotions just get crazy. But futures are recovering a little bit. S&P only down 0.21%. Seems the volatility of the market is driven by one person rather than actual company performance. The incentive to buy and hold is fading, especially for older, richer Americans. Percent increase. Yeah, Trump has way too much power at his fingertips. It's quite incredible. I mean, man, if Trump just wasn't as volatile, I think he would appeal to a lot more people. Maybe not, but man, it opens up crazy investment opportunities because nobody cares again about fundamentals during a during a market crash. Like, fundamentals are the last thing people care about, right? Like, if you are, dude, I mean, there's a million analogies you could put to this, but nobody cares. Nobody cares. Fundamentals this, fundamentals that. Who cares? Markets are crashing. All right. Well, market's turning green. Yeah, tomorrow might be a pretty good day. We'll see if we get any news, but markets are just oversold. So I wouldn't be shocked if we do get a bounce, maybe on the SPY back to like the 640s, 644, 645, to basically where you were Thursday short term. And then markets will kind of see what happens next. But anytime you get to 30 or below 30 on the RSI, you wanna short term take advantage of that. We'll see what happens. We'll see. I think you do have a gap lower if there is some kind of military invasion of Karg Island, but we could get a deal, and that is what nobody is expecting. Like, what would really screw the majority of people would be tomorrow morning, Trump and Iran agree to a deal. Both sides agree on this deal, and it's ready to be signed in a couple days. Strait of Hormuz is opened immediately. What? Nobody has that in the bingo cards. Not a soul on Wall Street believes that's going to happen. If that happened, let me tell you, you're going to make a lot of money if you're buying the markets right now. Lots of money. The guy brain farts. Yeah. Iceland. Greenland. He said Iceland when he was talking about Greenland. Will airline stocks rebound? Yeah, but airline stocks are very, different. Like, Delta, for an example, is in a totally different position than the next one, and the next one's so different. I think airlines will generally do pretty well. They're not my favorite, honestly. I haven't looked at them in a long time. Like American Airlines. I mean, it's consumer cyclicals, right? Nobody's bullish on the economy, so everyone's bearish on these stocks. When this conflict ends, when rates come down and expectations for Fed cuts go back to where they were a month or two ago, you will see probably a rally back into the high teens for airlines. Like that's the short-term story. That'd be a rally of 54% on American Airlines to get back to $16 per share. Like, that probably happens when the conflict ends. Like, that is more or less, I would say, where a fair value is for the stock. Not even running numbers, but I guess you've kind of been range bound for a while, so that's not a crazy prediction. You're pretty close to 30 on the RSI. Every time you get to 30, you tend to bounce back to 70. If you bounce back to 70, you're probably going back to 16. So percentage basis, you probably do have quite an opportunity in the airlines, but they're not my favorite long-term stocks to own. Michael, you inspire me, bro. Keep up the good work, man. Fingers crossed for Datavault and Resolve. Let's go. Thank you. Appreciate it, guys. What do you think about GRRR? I've recommended it a few times. I honestly can be an opportunity more undervalued than Zeta and Path. Dude, I need to look into this because I've seen your comment before, and I think I've liked it, and I think I've responded to your comments on the YouTube. I just forgot to look into it more in depth. Wait, what? Okay, that's. Oh, I'm on the weekly candlestick chart. Yeah, I have some work to do for sure with this one. But once we end the stream, I will check it out more in depth. I looked at the chart. I know I've looked at this chart before because I knew. But even then, last time I think I looked at the chart, it was higher than $9 a share. Oh, the cat's coming back. Stay back, Sparty. Definitely could be interesting. I mean, it was doing well for a while. November 2024, it started. I mean, it went up a lot from $4 to 40. Probably wasn't the greatest stock to own in the 40s, but $9 a share. I mean, definitely worth looking into, figuring out what happened there. Come on, Sparty, please. Come on, Sparty. You gotta go. Sorry, I know that looks mean, spraying him with a water bottle, but he loves me, but he's super temperamental. Like he would have he'll hit me in the face. Cat's a savage. So I'm definitely gonna look into GRRR. Grr. I'll just say grr. It's too many R's. Grr. No deal. Trump is a gift to the stock market. This is my first year investing, and I plan on 5xing my investments thanks to Trump. Yeah. I mean, as long as you're not in margin, as long as, you're cool sitting and waiting, yeah. It's literally just an opportunity. The volatility creating so many good discounts. So many good discounts. The problem is there's so many discounts. Which one do you buy? Right? And they're all high quality. Like a lot of the time it's, low quality selling off and high quality is super expensive. Then you're like, okay, which low quality is getting, too sold, right? Is getting too oversold. Right now, it's the best companies that are the ones that are getting oversold. It's not too often does that happen. Ian will be refurbishing fighter and refueling aircraft. Interesting. Resolve earnings tomorrow. Yeah, Resolve and Poet. Oh my gosh. How exciting. We're going to wake up to some madness tomorrow morning. Are you ready for bed?
Yeah, but I just want to go night to have my nighttime. How can my nighttime kit?
Yeah, just 1 second. Okay, so that I guess is my my call to end the stream, bro. Scared to buy on this. Yeah, there's just so many people talking about those. Which, when people are talking about something, it's usually good. Hold on, before I end it, because I haven't looked at where it is in a while. Yeah, jeez. Yeah, it's hard. That's a tough one. That's a tough one. Revenue growth looks really good though on Ondas. But aren't they like drones? Drones, right? Yeah. All right. Yeah, I'm gonna end the stream. She's ready for bed. Thank you guys for tuning in. Last look at the future. Almost green. Look at that. Let's see. Was there a headline? S&P is only down 0.12% now. Headline? Headline where? Headline? No. No headline. No headline that at least I see. But, hey, hallelujah. We'll see what happens tomorrow. Keep buying the dip. Keep hustling. This is the time where if you can make an extra $100, that $100 can turn into $500 in a year. Putting that in the right stock. So, yeah. Have a great night. And I will see you guys tomorrow. Poet Resolve earnings. Definitely going to be interesting. Should make some videos on both of those tomorrow. Or group them into the end of a video and give a little bit of a rundown at the very least.